Hello everyone and welcome to another RF Crypto video. Today's markets have seen another 3.3% decline over yesterday. Yesterday we saw a 5% decline and the decline has continued for the last week or so, going down by about 20% in the last 7 days. It's not been great for the markets. A lot of coins are making small recoveries such as Ethereum and Bitcoin. However, most of the coins are still in the red, especially if we look at Terra USD or the stablecoin UST. It has lost its peg to the dollar and it's lost more than half of its value in just 24 hours. And relating to that, we have seen Terra, which is its sister token, dropping all the way down to $2, losing almost 98% of its value over the last 7 days. And from this, it's lost almost 95% of its value in the last 24 hours. And obviously this is due to the depegging of UST from the US dollar, because as we know, Luna and UST are sister tokens, and UST is an algorithmic stablecoin which uses Luna in order to maintain its peg. So theoretically, you could exchange your UST for your Luna, and if there is a depegging of UST, which has happened 3 times in the last 4 days, market makers can use Luna, sell it in order to pump the prices of UST back up. But the shock has been so large that this has not been enough. And the 1.5 billion injection by the Luna Foundation Guard in order to try and pump up the prices has clearly not worked. And it seems to be that Luna is on its way to lose almost all of its value. And UST being essentially depegged from the dollar, we don't know if there's going to be any recovery in place. Obviously, the USD has been depegged before from the dollar and it's made recoveries, but it hasn't reached such levels yet. And this is quite a scary time for Terra as a foundation, as a company, because you never know what might happen. And can this spell an end for Terra? Maybe, because eventually they're going to run out of reserves to try and keep UST afloat and try to keep Luna afloat. And when that happens, there's nothing they can do. The markets are going to panic. I mean, they're already panicking. But if they say that they ran out of reserves and there's no one else willing to back them, then this will come to a point where it will be like a bank run where everyone is going to sell their UST and we won't see it being able to recover, and essentially the whole project might be dead. Otherwise, the markets aren't healthy. They are bleeding quite a bit. Everything's on the red. We haven't seen these levels since early 2021, and as I said yesterday, this is a bear market. Now looking at the price of Bitcoin, it is trading between 30 and 31,500. The support level of 30,000 is holding quite strongly. It is a psychological level, as I said yesterday. Whenever it reaches this level of 30,000, the bulls always come up and pump the prices back up. And also because it's psychological, the market makers get in and they think it's not going to go below this, let's buy. And that psychological buying mechanism or unconscious buying mechanism is what causes the prices to go back up. And at the moment, it is testing the $31,500 resistance level on its way up to 35,000. However, due to the high levels of volatility in the market, I don't see it reaching that level. It is pretty low. I think it's going to continue being this low and there is no end in sight. It's probably going to keep trading between 30,000 and 31,500, just evidenced by the fact that whenever it tries to break the 31,500 level, if you see here, 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 and here, the bears always get back into the action. They sell some of their assets and they push the prices back down. And this is typical of a bear market. And now we don't have a lot of money to pump into the markets in order to bring the prices back up. The Fed is raising interest rates and there is a lot of contractionary monetary policies in place. So money is not freely available like it was in the beginning of the pandemic, and it's going to be very hard to break from this dip. So let's take a look at what Terra's Meltdown means for centralized stablecoins such as Tether and USDC. So as the market panics over the implications of UST losing its peg, questions have obviously been risen about asset-backed stablecoins such as Tether and USD Coin or USDC. These are the 2 largest stablecoins by market cap, and the difference between the two between USDT and UST is that USDT is backed by the US dollar or backed by actual assets, while UST is more of an algorithmic stablecoin which is backed by its sister coin Luna and market mechanisms which cause its prices to, with a smart contract, be stabilized at $1. And one big advantage of USDT or USDC is that they would get exactly $1 back for every token that the stablecoin issuer sold. So if you have 10 USDT in your wallet, then Tether is ensuring that they have $10 in their treasury in order to back that USDT that you have in your wallet. So if you go to Tether one day and you say, can I have my money back? You can have your USDT back. It will be a case where Tether will give you back your $10 for you giving your USDT back to them. So it's like the gold system that for every dollar that is in the market, it was backed by, let's say, an ounce of gold or whatever the exchange rate was. So in the same vein, USDT, if there is $100 billion worth of USDT in the market, Tether will have $100 billion worth of assets, be it cash equivalents, or other assets backing that $100 billion of USDT in the market in circulation, which makes it safer than algorithmic stablecoins such as UST, because with this, they are ensuring that they have enough in their treasury to back that $1 peg. So normally UST will perform well, and it's, as I said, it's an algorithmic stablecoin and uses smart contracts in order to determine how to maintain its $1 peg. One method is by burning Luna in order to maintain that peg. So if you have a case where the smart contract stipulates that the price is going to go down, they can just burn some Luna in order to maintain that $1 peg. The Luna Foundation Guard has reserves in Bitcoin that they could deploy to market makers in order to maintain UST's price at $1. But there has been a lot of volatility in the market, and because of that, there has been a massive sell-off of UST, especially in protocols such as Anchor and Curve, and that has caused the UST stablecoin to lose its peg against the dollar. And with that, it comes to a point where not even the injection of cash or the flotation devices, if they call it, can maintain that peg. Neither can the Luna Foundation Guard maintain the peg, nor can the burning of Luna maintain the peg. And the second one is even more important because that's the reason why it has lost 97% of its value, and most of that loss came in the last 24 hours. So asset-backed stablecoins like USDT or USDC have had their own problems. On a few occasions, Tether and USDC has lost their dollar pegs. So the most recent case was when USDT dropped to $0.98 on March 16th. And of course, this is a depegging of USDT, but it's important to note that it's nowhere near close to the depegging that UST is facing at the moment. And in March 16, 2020, when USDT dropped to 0.98, this was because crypto and traditional markets reacting to the news that people were being advised to shelter because of the pandemic. The pandemic had just started then, and the market started to panic outrageously, and that's why it lost its peg briefly. However, they have assets that back the stablecoins that are an issue, and the peg went back to $1 again. So in essence, asset-backed stablecoins have a lot more safety mechanisms in place than algorithmic stablecoins like UST. And because it's fiat collateralized, there is less risk of dramatic fluctuations in the value of their currency reserves. What this means basically is that these USDT and USDC are backed by fiat. They're backed by the dollar, or they're backed by some assets that are dollar denominated. Therefore, the prices of those assets, they don't change much. I mean, $1 is $1. So the dollar value of their reserves are usually constant. They might have few oscillations, but in general, they're constant. However, most of the reserves backing UST is Bitcoin, which means that at one point it was 45,000, now it's 31,000, meaning that the reserves have decreased dramatically. And this is one of the reasons why it's been seeing a massive sell-off, because obviously people think that, there aren't enough reserves now to cover what UST is in the market. And this is the main problem with algorithmic stablecoins, and this is a point where asset-backed stablecoins win. And even with the volatility in the market and the markets crashing, Tether and USDC have managed to maintain their pegs. There is a caveat that the ratio of commercial paper, which is unsecured, backing the USDT is quite high. It's 37% of all of Tether's cash reserves. This can be concerning in the case of a default. For example, in September 2021, Chinese real estate developers Evergrande and Kaiser were at risk of missing US dollar bond payments, which is the type of commercial papers that made up 30.6 billion of Tether's 69 billion reserve at the time. So if these real estate developers missed their dollar bond repayments, these commercial papers would become worthless and those reserves would become worthless. So it is a case where there is backing by commercial paper and cash equivalents for USDT and USDC. However, a big percentage of this is through unsecured debt. A lot of the time it's no problem, but it can be a problem when there are defaults. But hopefully Tether's management is able to minimize this risk by investing in more secure unsecured debt, which means that those unsecured debts that are less likely to default. So in terms of safety, I believe that USDC is safer than USDT simply because by October 2021, all of its 33 billion reserve was in cash and cash equivalents, and it had none in commercial papers. So this means that all of the reserves are backed by cash, which is something that will not lose its value. It's not like an asset which price goes up and down. The dollar is the dollar, and they have no commercial papers which can go into default and lose its value. So New York digital media company is the latest to add Bitcoin to its balance sheet. So Townsquare Media, which is a New York-based digital market and radio station company, is the latest business to back. Obviously, it's called the original cryptocurrency Bitcoin, with its addition of $5 million worth of Bitcoin to its balance sheet. It invested in Bitcoin because it believes that there is long-term potential of digital assets as an investment, and because of its inherent liquidity. There is an ease of converting it to cash using a crypto exchange. Despite the fact that Bitcoin is an asset, it behaves more like a currency because it's so liquid. You can just add it to an exchange and get cash for it. And this is a very smart time to be investing in Bitcoin because the prices have gone down by a massive amount. So if they can get in cheap and the prices go up, then they're making massive profits and their balance sheet becomes stronger. If the prices go down, they can just DCA and their average price of purchase will decrease. So it's a win-win situation as long as Bitcoin doesn't go to zero, which obviously it won't. So Coinbase's CEO has never been more bullish even after a $430 million Q1 loss. They have disclosed its first net loss as a public company and its revenue dropped by 27% and monthly transaction users also dropped by 19%. However, they are still optimistic. So they stated that the broader markets are down. We're seeing a down market for growth tech stocks and risk assets. Coinbase and crypto is no exception to that, of course. The good news is that as a crypto company, they've lived through many cycles in crypto, including major drawdowns, which they think will make them more suited to operate through these environments. And they believe that NFTs are the future and they're heavily investing in it. They think that if they can push through this difficult time, they will become one of the market leaders. Also, they believe that the industry is in its early days and Coinbase sees the opportunities ahead, adding that regardless of whether the market is up or down, they're going to keep building. They believe that crypto is the future, despite the fact that now we're seeing a downturn in the market. And remember, whenever we see a downturn in the market, people call crypto a scam, people call crypto a joke, and they always have a bad thing to say about crypto. However, when crypto is on the upside, they speak good about crypto. So it's only fair for them to be supporting crypto when it's down the same way they support crypto when it's up. And I think it's quite clever of them to be doing this because by doing that, they can invest in a technology that is almost guaranteed to be part of our everyday lives in the future. And that's it for today's video. I hope you enjoyed the content. If you did, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely, and cheers.